Yo, what's good? How you doing? I'm back. I ain't gonna lie, it's been some time. Not that long, but last time I posted it was on Thursday evening, but currently it is Tuesday evening. But yeah, I'm back, and you know, I think it's time for you guys to learn about order blocks, a really important topic. And I might explain you everything about it and how we can use it as our advantage to find better trades and what is it for us. But hey man, really important topic, stay tuned. Oh yeah, and by the way, I didn't take a trade today because it's CPI news day. And hold on, let me just show you real quick. Hold on. Man, as you can see right there, it's currently February 13th. And yeah, CPI news. And I really hope you didn't trade either because man, it's not smart to trade on CPI days. On Obviously it depends what kind of red folder news, but on CPI specifically, you should just skip those days. But anyway, let's get straight into business.
We're in the charts right now. Charts. And yeah, what is a order block essentially? How can we use this as our advantage to basically win trades and get a better entry? And yeah, so let me just explain it as simple as I can so you can understand it. Order block is a retracement tool, meaning let's say if we enter, we see a break of structure, aka meaning market structure shift, but the risk to reward ratio ain't that good, and then we can use the order block to get a better entry. But yeah, that's on lower time frames when you want a better entry. But on higher time frames, we can if you see a order block, price is currently in an order block, and then that's just more confirmation, because then we can go to a lower time frame to see more confirmation, and then we can essentially enter off of, more confirmation is always better. But that's like how we can use it. But what is a order block? Let me just try and explain it. Let's say we have liquidity up here. Okay, this is liquidity, area of liquidity. The price is on an uptrend, okay, meaning it's going up, our highs, our lows. We sweep the liquidity, then we make a break of structure right here. A break of structure, break of structure right here. Hold on, let me just make it real quick. Hold on. Okay, a break of structure. This is a break of structure right here, this area. Let me just put a line like this. This is a break of structure. Now, this last up candle after the break of structure is our order block. This whole area, the one that swept the liquidity, essentially. So this, in this case, what the banks and the institutions that move the market, they want to fill as much as orders as possible. So when they sweep liquidity, they fill massive orders, massive orders. They take out people out of the market, and people also enter to the market. So the order block, it has the banks and institutions already took out a lot of traders, they filled orders, but if they want to fill even more orders, they have more orders left to go, they can simply just go back into this order block and then continue its direction where it was going after the break of structure. So as you can see, you already can see it basically, how we can use it as our advantage. Let's say we have a break of structure. We want to enter off of like this. This is the break of structure, this right here. Break of structure kind of closes right here, okay? But then we're like, this restored ratio ain't that good. So let me just mark out this area of this order block and then place it like this, okay? Okay, and then it comes back, and the ideal would be like this. Goes into the order block, boom. That's the ideal of order block. But also on higher time frames, we can, if we see the prices like this in an order block, then we just can go to a lower time frame, and on low time on a low time frame we can see a liquidity sweep, even more confluence, and price is already in the order block on the higher time frame, and then we can look for break of structure, and then we can enter. It may sound complicated, but you'll get it. It's actually quite simple. Okay, other way around. Let's say we have liquidity down here, example, and then we're going down, downtrend, lower highs, lower lows, lower highs, boom. We sweep this area of liquidity, we break structure, structure breaks. I know this ain't the most beautiful that you have seen, but yeah, liquidity gets swept. Essentially, structure breaks. We had a market structure shift to the upside. Break structure right here. What happens? What happens then? Oh no. The last down candle after the break of structure is the order block in this case. This right here. This is the last down candle. The candle that swept the liquidity. The last down candle after the break of structure to the upside. So this is the order block. This area is the order block, okay? And let's say it candle closes here, break structure. Oh, you're not happy with the restored ratio. Cool. Wait for it to come to this order block. And the ideal would be like this. Comes here, continues its direction. aka meaning banks filling out more orders and then they're happy. But be cautious that the order block, if the market movers are already happy, they already are not complaining, then it may not come back into this order block. They can just continue its direction to the whatever was going. But let's be honest, usually they come back, like they consolidate and then continue. But odds. Okay. And obviously in higher time frame, if the price is already in an order block, then we can just go into a lower time frame and seek for more confluences, liquidity sweeps, break of structure, another order block in the lower time frame for a better entry. But I must just say like this, the most important confluences are probably liquidity sweep, break of structure, and yeah, obviously you gotta know the bias. Are we bullish or bearish? Yeah, obviously highs and lows, because without highs and lows you cannot know what is a liquidity sweep, how to spot liquidity sweeps, how to spot break of structures. But this order block is like a fair value gap. It's a retracement tool that we can use as more confluences and to find better entries. Okay, I hope you understood. I hope you understand that what I just explained. But now I'm gonna just show you examples of order blocks in the charts. Okay, examples. All right, where can I start? Okay, I found one example of an order block. Okay, as you can see right here, what happens? What happens here? This right here, this is a downtrend. Okay, downtrend. What happens? We fill this fair value gap. As you can see, we fill the fair value gap completely. Fill the fair value gap like that. Then on a 4-hour, what do I see? Downtrend. We make a high, then high right here. Hold on. Okay, this is a high right here. This is a high, up candle followed by down candle. Then this massive up candle breaks the structure, so we close above this high. So that's a break of structure. Okay, structure breaks, we go to the upside. What does it leave behind? This last down candle, the last down candle after the break of structure to the upside. So in this case, this whole thing is the order block. And what happens here? What happens here? Break of structure leaves order block behind. We don't hit it, but then we go back into it. We go back into it, and boom, rally up. Okay. Okay, and that's that. Then let's see if we find more. Okay. Okay, right here. Let me just show you. Right here, uptrend. Okay, we're in an uptrend. Cool. Uptrend. High highs, high lows. Last time broke structure, it was to the upside. Okay. Then what happens here? We see a low getting formed, down candle followed by an up candle on a downtrend. Right there, and then structure breaks to the downside. Right there, down candle closes below the previous low on an uptrend, so it's a break of structure to the downside. Okay, hope you understand. And what does it leave behind? You guessed it, the order block. So let's say, for example, in this case, we want to enter, but the restored ratio ain't that good. What does it leave behind? The order block, the last up candle after the break of structure. This whole thing, this white ass candle right here, the up candle, last up candle. As you can see, boom, we tapped into the order block, continue down. Okay, we continue down right there, and then let me just, I mean, it also happens on every time frame almost. Okay, happens on every time frame. Order blocks. Okay, but remember, it's a retracement tool, so keep that in mind. Okay, so yeah. Okay, right here, we, as you can see, we're in this fair value gap. As you can see, we're in this fair value gap. Fill the fair value gap. Okay, right here, downtrend. Make a high, up candle followed by a down candle. What does it form? A high. What happens after that? Break structure. Up candle closes. Up candle closes above the high, so it's a break of structure to the upside. So we flip the market to the upside because we already have confluences. We sweep shit, and you know, good things happen. What does it leave behind? Oh, I didn't see this. This is actually the break of structure. My bad. So what is here? A up candle followed by a down candle. This low was so little, so I didn't even notice it. Okay, but yeah, this is me being honest. So this is a high. This is a high. This actually shows you that most previous high is the one that counts in a break of structure. So yeah, this does close above it, but this is the most recent high. Okay, a high, up candle followed by down candle. Candle breaks above it. What happens? Closes above it. What happens? A break of structure. Break of structure to the upside. So what does it leave behind? This mini the last down candle after the break of structure to the upside. This mini candle, as you can see, this mini candle right here. Hold on, my bad. Okay, this is actually quite perfect. I go lie. Break structure. We go a little bit up. The market fills out even more orders in this order block. Boom. Continue up. Continue up. Boom. That's just wow. And as you can see, it goes like that. It goes like that, and here's liquidity sweeps and continue up, and that's pretty much how it goes, bruh. That's pretty much how it goes. Okay, but also, yeah, but also you gotta know that order blocks, just like any other confluences, it happens on every time frame, and the hard time frames just hold more power. But if you look it as a retracement tool to get a better entry on a lower time frame, so that's cool. But on a hard time frame, it's just more confluence. Okay, but remember, as any other confluence, it also happens on every pair. Like, okay, GJ, Japanese yen against the, I mean, great British pound against the Japanese yen. So, and I trade this pair. So, okay, let me just try to find an example of an order block. Okay. Okay, here is one example. One example whatsoever. Look at this. Uptrend. Last time we broke structure, it was to the upside. Okay. Okay. As you see, right here, we'll make a low followed by a down candle followed by an up candle. That's a low. Then this big candle breaks above it. I mean, breaks below it, so that's a break of structure right there. A break of structure to the downside. What does it leave behind? What does it leave behind? This little up candle. As you can see, prices rallies up, goes there, boom, goes down. What happens then? Sweeps a lot of liquidity down here. Then it can continue its direction. Where does it want to go? Okay. Okay. Same thing here. The structure, as it swept liquidity, like I told you, liquidity sweeps, they're just dominant in this game. This is how it goes. So it sweeps liquidity, sweeps a lot of liquidity. Then again, what happens here? Up candle followed by down candle on a downtrend. That's the break structure to the upside. Right here, an up candle closing above this high, the recent high. What does it mean? That's a break of structure to the upside. Okay, simple. That's now a break of structure. What happens then? What does it leave behind? The last down candle after a break of structure is the bullish order block, like this. And what happens here? Perfectly. It perfectly. What the fuck am I saying? You can just look at it, okay? The area of order block, the bullish order block. The price wants to fill more orders, goes to the order block, boom, continue up. And what happens here? Same thing. We sweep liquidity, get a liquidity sweep, flip the bias. Okay, as simple as that. Simple as that, guys. Yeah. Break structure, continue down. Man, that's simple. Simple stuff. Okay. Okay. Here is one example. I know this is kind of choppy. The price is kind of choppy, but what is it? it's a downtrend. Last time it broke structure, it was to the downside on the 1 hour. Downtrend, liquidity sweep. We sweep this liquidity. We also sweep this liquidity. After that, what happens? We make a high. We make a high. We didn't break. We make another high. We didn't break. We make another high. We didn't break. Then we make a new high. The most recent high. It actually breaks structure. Up candle followed by down candle. What happens? Up candle closure above this high. Most recent high. Okay, a break of structure to the upside. What does it leave behind? What does it leave behind? And as you can see, this is actually perfectly aligned with the Asian session open. So obviously I do only trade on session opens and max 2 hours into the session, because if it's off the session, it doesn't actually move that much. But yeah, off topic. As you can see, break structure. What does it leave behind? This whole order block. The last down candle. This last down candle after the break of structure. It leaves that behind. What happens? Structure breaks, fills more orders, goes into the order block, continues its direction. And where does it want to go? As you can see, bullish, just like that. And wow. But I'll just say it like this: don't use the order block as your only confluence, because let's be honest, that ain't gonna work. Order block, just like fair value gap, it's a retracement tool that we can use to get better entries. Simple as that. Simple as that. But obviously, more higher time frames hold more power, as usual. But let's go into the asset. As you can see, I switched the pair to the S&P indices. We were using Forex, now we're on indices. Also commodities, but this is indices, okay? S&P 500. Alright, okay. Let me just show you if I can find an example. I just found one. As you can see, currently I'm showing you the ones that where they respect the area of order block, but you gotta remember that they don't always do that. It doesn't always come back to the order block, because if they already filled enough orders, then they may not come back to the order block, because if you're happy with the last, like the previous orders getting filled, like in the liquidity sweep, then they may not come back. Hope you understand. Hope you understood that. But okay, here, what are we? Down candle whatsoever. Oh shit, this is a order block, as you can see right here. A high, break structure, order block, comes back. As you can see, reacts to the order block, boom. What happens here? Again, down we hit the order block, we break structure to the upside right here. What does it leave behind? The last down candle after the break of structure right here. What happens? Break structure, comes back, fills orders, continues up. Simple as that. Simple as that. Okay? Simple as that. Wow. And right here, this is also a fill of order block plus a liquidity sweep right here. But liquidity sweeps are just more dominant, so like I told you. Okay. And right here, as you can see, let me just show you, even though it also doesn't always get filled, because as you can see right here, as you can see, a big liquidity sweep, meaning, as you can see, a liquidity sweep right here. This is a liquidity sweep. what happens? Sweeps, massive orders get filled, banks can be happy. What does it do? We break structure. This is the last high, up candle followed by down candle. That's a break of structure to the upside. Okay, what does it leave behind? What does it leave behind? This order block right here. But as you can see, it doesn't always get filled because it already from the liquidity sweep it already like filled massive orders. Many, I mean, I could say real many people get filled out over here. Many get stopped out, and also many get into the markets. So the banks are happy. They get the best price. They push the price above, leaving this order block behind. But it doesn't care because they already filled more enough. Okay. But in this case, it also leaves this fair value gap behind that you can use, but it doesn't also get filled. But in this case, as you can see, this whole thing can also be the order block. This whole down move, because on a high time frame, hold on, let me just show you. As you can see, on a hard time frame, this is the last this whole thing. This is the last, like the order block. A break structure to the upside, leaving this order block behind. But on the lower time frame, it was only this. It was only this. So you gotta keep that also in mind. But if you're on a long time frame and you're just looking for a retracement, then I would just suggest you to use the last previous candle after the break structure. If it breaks structure to the upside, then the last previous down candle after the break structure, that's the order block. And it also gives you a better entry because that's more specific and also gives you more confirmation. Hope you understood that. I hope you understood that, guys. That's about order blocks, man. So yeah, that's about order blocks. So order block on an uptrend, last after a break of structure, BOS, the last the previous up candle after the break of structure is the order block, OB. On a down candle, on a downtrend after a break of structure, the previous down candle is the order block, OB. Just like uptrend. Hold on, where is it? Come on, man, where can I find it? There. Uptrend, break of structure. So this is the bearish order block. Last up candle after the break of structure. Last up candle after the break of structure is the bullish order block. So that's the order block on the uptrend. Okay, and a downtrend. On a downtrend, the break of structure. So the last down candle after the break of structure, the most previous one after the break of structure, is the order block. So this is ideal. Boom, boom. That's the ideal, okay? But yeah, you also gotta keep this in mind. You cannot find a order block if you don't know what is a break of structure. So always after a break of structure, let's say we're in an uptrend, but we also sweep liquidity, but it's a sweep, and then we break structure again. This is also a order block. I know that's kinda messy, but still, this is a liquidity sweep, and then a break of structure, and this is the order block. Hope you understand. Hope you understand. But I'm gonna just write this down. Always remember that confluences, for example, order blocks, always hold more power on higher time frames. Higher time frames. Higher time frames hold more power always. It doesn't matter what confluence is it. It's just how it goes. But obviously we use break of structure on a low time frame and other confluences to get an entry on low time frames. But on high time frames we get the big move. We see the overview. We see the bias. We see liquidity sweeps that can flip the bias on the high time frames. But on the low time frames we can seek for entries and even more confluences. I hope you understand, man. I hope you understand, but that's about order blocks. That's about order blocks, man. And I also haven't taught yet about fair value gaps. That's also a retracement tool coming in near future, so stay tuned. But that's about order blocks. Yeah. Share this video to a friend so they can learn trading. But safe trading, guys.